Beginner's Guide to Cryptocurrency Investments. Welcome, aspiring investors. Have you ever wondered about diving into the futuristic world of cryptocurrency, but felt overwhelmed by where to start? You're in the right place. In this comprehensive guide, we'll embark on a thrilling journey through the captivating world of cryptocurrencies, demystifying this digital revolution. We'll unravel the essence of cryptocurrency, illuminate why you might consider investing, explain how to navigate the sea of digital currencies, and even share some top-notch investment strategies. And here's the clincher. Stick around till the end, and you'll be armed with a wealth of knowledge and insights to confidently make your first cryptocurrency investment. Let's decode the cryptic world of cryptocurrency together. Understanding cryptocurrency. To start, we need to understand what cryptocurrency is. In simple terms, a cryptocurrency is a type of digital or virtual currency that uses cryptography for security. It operates independently of a central authority or government, and can be transferred directly between users on the blockchain, a decentralized digital ledger technology. Bitcoin, introduced in 2009 by an anonymous inventor or group known as Satoshi Nakamoto, was the first cryptocurrency and remains the most well-known. Since then, over 4,000 different cryptocurrencies have been developed, including Ethereum, Ripple, Litecoin, and many others. Transactions are verified by network nodes through cryptography and recorded on a public ledger called a blockchain. Since Bitcoin's inception in 2009, thousands of alternative cryptocurrencies with various functions and specifications have been created, broadening the cryptocurrency landscape significantly. Why invest in cryptocurrency? Now, why should one consider investing in cryptocurrencies? Investing in cryptocurrencies can be an attractive prospect for several reasons. Firstly, some cryptocurrencies have demonstrated significant increases in value over time, presenting lucrative opportunities for investors. For example, early adopters of Bitcoin have seen astronomical returns on their initial investments. Secondly, the underlying technology of cryptocurrencies, blockchain, is considered a trendsetter with the potential to revolutionize various sectors, ranging from finance to supply chain logistics. Lastly, as the acceptance of digital currencies expands, more and more businesses are beginning to accept cryptocurrencies as a form of payment, enhancing their practical use beyond mere speculative assets. However, it is crucial to remember that, like all investments, cryptocurrencies carry risks due to their volatile nature. Research before investment. Before investing in any cryptocurrency, thorough research is critical. Thorough research is an integral part of any investment strategy, and this holds true for cryptocurrencies. Familiarizing yourself with the technology behind cryptocurrencies, primarily blockchain, is a good starting point. Understanding how the decentralized, secure nature of this technology influences the behavior of cryptocurrencies can provide a fundamental knowledge base for potential investors. Additionally, understanding specific elements of individual cryptocurrencies, such as their market cap, liquidity, and overall supply, is crucial. Importantly, understanding the intended use or purpose of a cryptocurrency can provide insight into its potential future value and stability. Creating a cryptocurrency wallet. To handle cryptocurrencies, one requires a digital wallet. This wallet serves as a personal interface for the blockchain, allowing the user to send and receive digital currency and monitor their balance. Cryptocurrency wallets can exist in various formats. Online wallets, or web wallets, are cloud-based and can be accessed from any computing device anywhere, providing convenience and accessibility. Desktop wallets, installed on a PC or laptop, offer increased security but limit access to the device on which they're installed. Mobile wallets, designed for use on smartphones, offer both mobility and functionality. Hardware wallets are physical devices like USB drives that store cryptocurrency offline, providing the most secure option but sacrificing some convenience. Remember, your wallet is only as secure as your security practices, so always use strong passwords and keep your wallet's private key secure. Choosing a cryptocurrency exchange. After setting up a wallet, the next step is to choose a cryptocurrency exchange. A cryptocurrency exchange is a platform that facilitates the buying, selling, and trading of cryptocurrencies. There are numerous exchanges to choose from, each with its own unique features. Exchanges like Coinbase, Binance, and Kraken are among the most popular due to their user-friendly interfaces and extensive support for various cryptocurrencies. When choosing an exchange, consider factors such as security measures, fees, customer support, the cryptocurrency supported, and the geographical location served. It's worth noting that while many exchanges are reputable and reliable, not all are, and the industry has seen instances of hacks and fraudulent activities. Investment strategies. When investing in cryptocurrencies, it's wise to follow some investment strategies. Here are a few to consider. 1. Diversification. Just like any other investment, it's prudent not to put all your eggs in one basket. Diversify your portfolio by investing in different cryptocurrencies. Diversification is one such strategy, aiming to spread risk by allocating investments among various financial instruments or cryptocurrencies. 2. Dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the cryptocurrency's price. This approach minimizes the impact of volatility and removes the need to time the market. 3. Long-term holding. Long-term holding, often referred to as HODLing in the crypto community, is based on the belief that while cryptocurrencies may be volatile in the short term, they will increase in value over the long term. However, if you believe in the long-term potential of cryptocurrencies and blockchain technology, it might be better to hold your investments for the long term. Well, investing in cryptocurrencies can be a rewarding but risky venture. It's essential to do your research, understand what you're investing in, use secure wallets and exchanges, and follow sound investment strategies. While we can't predict the future of any specific cryptocurrency, the widespread adoption and potential use cases of blockchain technology suggest that cryptocurrencies will likely be part of the future financial landscape. As a beginner, it's advisable to start with a small investment that you can afford to lose. Learn from your experiences, keep updated with cryptocurrency news, and gradually improve your investment strategies. Remember, this guide is intended to provide an overview and is not investment advice. Always seek advice from a certified financial advisor before making any investment decisions. Invest wisely and happy investing!